Good morning and welcome to the market forecast. Happy Monday, everyone. It is Monday, August the 9th. I'm John Hoagland. Thanks for trusting me with your time. I hope you had a nice weekend. Weather around here was okay. It was pretty hot, pretty humid. Hopefully, you were able to get out and have some fun and treat yourself nicely. We deserve that. We work hard at this and we have to do things that make us happy. And it's Monday again, so I think we're all happy. We've got a full week of trading ahead of us, opportunities unknown, but certainly present. As always, we're going to be thinking about accurate context, good risk management, and remaining patient in our trading today and as every day. Economic numbers this morning, 9 o'clock, the JOLTS numbers, the job opening labor turnover survey is due out. Not expected to be too impactful. However, there are a couple of talking Feds today at about 9 and about 10:30, two talking Feds speaking. We've got a few talking Feds speaking, and there's something we're going to be talking about here shortly. There's a lot more agreement in getting the tapering talk a little bit sooner than possibly expected. But as for this week, as economic numbers, productivity and cost tomorrow at 7:30 Central. Charles Evans speaks tomorrow. Wednesday, the CPI 7:30 comes out. Of course, EIA at 9:30 Central Time. A couple of talking Feds on Wednesday as well. Thursday is always the jobless claims numbers coming out. The final PMI also due out at 7:30, same time as the jobless claims Central Time, of course, and then 9:30 Central, the nat gas numbers due out, and then import exports and consumer sentiment on Friday. So we're getting a little bit of a break, I think, from the number of and the importance of economic information due out this week. So a lot more focus is probably going to be on some other things that are currently in the news. We had a pretty good drop in commodities last night, mostly metals and crude oil, blamed on growing COVID infections in China. They're at a 6-month high right now, seeing an increasing COVID infections here in the U.S. as well. But U.S. stock indices are set to open steady to lower as investors are focusing more on Fed speak. A lot of more talking Feds talking about increased talk of tapering. Infrastructure vote is supposed to be coming out one way or another this week, so there'll be a lot of focus on that, as well as the kind of, wrapping up of quarter two earnings. You Bitcoin watchers, strictly rumor, but apparently Amazon may be preparing to accept Bitcoin as payment, and also in the rumor mill, Apple could be next. Bitcoin currently up about 4% at 45,762. Wow. That's pretty big. That's pretty big. Crude oil opening up, leaving the opening range at the low of the session. This I find interesting. We're going to look at this very shortly. As always, make sure you hit the lucky like button. Share, question, comment, feedback, and heckling are always welcome. Subscribe to our YouTube channel. You get notifications when we do go live. Taking a look at the VIX this morning, up about 7%, 1723. Still not a very high number, but I find it interesting that it's up that much of a percentage this morning. Dollar index pretty much steady at 92.74 last I checked, and the 10-year yield down a little bit at 1.28%. That's just from Friday's settlement. As always, got to say good morning to everyone. Viper Futures, first one in the room. You win the prize. Good morning, Theo. Always a pleasure to see you. George, best trader community in the world. Well, we appreciate that, Jorg. We do strive to please. Harry Gordon, good morning. Jim Murph, good morning. Yes, got a whole week ahead of us. Jerry is awake, and I hope John is too. Nico, Brian, Bill, JB, Caesar, James, good morning. George Adams, good morning. Laura, good morning. Jason Cargill, Greg H. Zurain, good morning. JD, good to see you this morning, my good friend. Joseph, the future scalper, good to see you. Brett, Fred Decker, hey, Hogue, let's try and take an opening range trade in CL. Well, if you have, it looks like you might be headed in the right direction. We're going to see those charts here very shortly. Drones over Texas, good morning. Cyril Nelson Benitez. Vince, good to see you. Hope you had a nice weekend, sir. Ed Nelson, John Huckel, John Roberts, Manuel, good morning. Fred, I think I missed my opening range trade. The train left the station without me. Well, sometimes it'll come back and give you that second chance at it. We'll take a look and maybe you'll get that second chance. Luck Johnson, there's a good name. I like that. Anthony, good morning, nephew. And Ainge, good morning, Ed. Prophet Eon, good to see you as well. All right, I think I got a Manuel. I got everybody here. Stacking Bananas with us here today, and hopefully going to be stacking some bananas throughout the trading day. Patience, context, risk management. That's what we're looking for. Let's take a look at what we see in the charts here. I'm going to start, as usual, with the daily in crude, which took a pretty good nosedive for us last night, but stopping pretty much right at a previous swing low. Let's take a quick look at it here. I don't trade overnight, and sometimes I wish I had. So we've got our weekly kickoff low here at 67. So we're opening outside of the weekly kickoff range already this morning. We've got last week's low right here, this pink line here, and we've got a naked point of control that we have, I think, yet to test in regular trading hours. It is the weekly kickoff low here, 6,700. Kickoff high is way up there, 73.75. It's a pretty decent downside move last week. So the market has seemed to be expanding, which says a lot about why the weekly kickoff levels are so far apart. It was a pretty decent, big, volatile downside move overall last week. So we're opening outside weekly kickoff range. Two obvious swing lows that could be interesting. Obviously, this swing low that we tested to last night, it's from the 20th of July. That's 65.01, 65.15, our overnight low. We've got another swing low down here that is the 21st. Yes, the 21st, 61.06 would be our next weekly or our next swing low to test down to if we do continue in this downside momentum that we seem to have created. Did we create momentum on Friday? No, we lost 27,000 in open interest on Friday. So there doesn't look as though on Friday there was a lot of money coming into the short side. It was a down day. It was a test to the weekly low, couldn't quite get there. So it doesn't look as of right now that this downside jaunt that we're going on is building momentum. It almost looks more like it's falling in momentum. Now we've got new information. We are below an important inflection level, and if we bring in new participants to the short side, we could certainly take out this swing low and head to this swing low. Nothing says we can't. And we always thought that crude oil couldn't go to zero, and it went actually to negative 40 last May rollover expiration. So the drop in open interest on Friday, are we bringing new business into the downside here today? Only time was going to tell. Take a look at the 30-minute chart. So when we open last night, we drive basically right to weekly kickoff low. It becomes resistant. Now we're getting a kind of a push back towards it. We've got an opening range trade trading to close the gap. This is a pretty substantial gap. And, I've got right on my notes here, it's quite possible that there could be a good opening range trade today, which it does look like we have to the long side. If we get an opportunity to come back up and test this weekly kickoff low, you might find some fish there. We found some fish on the opening range trade. Are we going to continue? Are we going to get to this level to see if we can find some fish up here? We have to be patient. We have to wait and see. So gap rules. Here's Friday's low. Okay, basically last week's low, maybe a little bit lower than that here. Last week's extended trading hour low, right here. So it's a pretty substantial gap to try and take out. We got some pretty considerable longs in this market from last night. Shorter hands, shorter time frame, shorts in this market. Perhaps they're the ones that have created this stab to the upside when they kind of realized, hey, we're not going to get paid right away after this open. Well, let's take some of those off and see how the day plays out. I'm looking for fish at weekly kickoff low, and of course we've maybe found some fish here on the opening range trade. Opening range trade, first minute of trade, we break out the above it, we go with it. We have overnight inventory that's on our side. We've got a possible test back to an important inflection level, also could be on our side. But what we're looking to see is, are we going to close this gap? And if we can't close that gap relatively early, I will be looking for opportunities at weekly kickoff low here, that 67 even level. And let's take a look at the E-mini S&Ps now. In fresh all-time highs on Friday. This is the daily chart, of course. We're still grinding higher. We've tightened up our weekly kickoff levels. We've tightened up to the downside here quite a bit. The market is really kind of falling into a lower area of volatility. We had some smaller ranges over the past couple of weeks. And currently we're looking at this as an area of balance, and Thursday into Friday, we kind of broke out and accepted above that area of balance. We've got last week's high in this pink line here, which is the all-time high in the regular trading hour session. We don't have to chase the overnight all-time highs as we had been all the way up here. We've put in an all-time high in regular trading hours. We lost 6,700 on an all-time new high. That doesn't bode well for bringing new business, new upside participants into the auction. Seems right that we've kind of pulled off a little bit here, and we're going to be opening a little bit lower, at least in the E-mini S&Ps. I think we're probably going to be opening a little bit higher in the Nasdaq, and we'll see that very shortly. But our upside structure remains. Price continues to attempt to hold above the previous area of balance. Those are all positives to the upside. The negative, we didn't bring in new business on an all-time new high on Friday. That's the one thing that concerns me a little bit. 30-minute chart. Okay, we've got settlement all the way up here. 44.29.50. Put that on your charts. Very close to Friday's point of control. The market got a little bit too short to the downside here. We're already back in range and perhaps going to be opening in value, which tells me that there may be better trade locations as the day goes on. That's one of the contexts that we look at. Is the market still in value from the previous session, or has it left value and is seeking acceptance outside of value? So right now, it looks like we're going to be opening in value. That's going to tell me I can probably look for trades as the day goes on. Unlike in crude oil this morning, which opened out of balance and offered an opening range opportunity, it's going to be less probable for that to happen in the E-mini S&Ps today. So we are not going to be opening with a gap. Our overnight shorts already reconciling. Acceptance of value on Friday again. Maybe there's a little better opportunity as the day goes on. Where might we find some fish? Well, I've got settlement, the point of control, and value high relatively close together up here. That's something that says there might be some fish up there. Of course, you want to watch that opening range, even though we may open in value. It still can offer a decent opportunity. But other than that, I'm going to try and stay patient. We've got our all-time high, last week's high. We got a naked point of control that looks like it was hit here, but not in the regular trading hour session. So this still remains a visual target for prices to the downside. So our overnight low and this naked point of control offer an opportunity. But inside value, try and stay patient. Better trade locations tend to come as the day goes on. Nasdaq. Upside structure remains. A little break in it here, but we're still putting in higher highs and higher lows. We had a 3,200 contract increase in open interest on Friday, on a day that turned out to be a down day, right off an all-time high. This market still is presenting largely as range-bound. I would be more encouraged for upside continuation if we had an up day and added that 3,200 in open interest here in the Nasdaq on Friday. We didn't. We entered the other way. It's almost like there are new sellers up here trying to keep that as the high, at least for the time being. Sellers are looking to profit. We'd be looking for lower pricing if that were the case. Okay, we have even overnight inventory. We just had a stab right back to settlement. We got a little too short. We've reconciled those shorts. Again, we're in value and in range. Look at Friday. Sometimes we talk about repair days, and this isn't a typical repair day. Typical repair days are sometimes occur when you have a double distribution trend day and you trade to the high volume nodes of both extremes. But Friday we opened, we tested to this point of control, we tested to this point of control. If we were trading off those points of control, we basically picked the high and the low. Pretty interesting stuff. Settlement is basically our point of control today. Not in that same situation. In range, in value, no gap, stay patient. It's only Monday. We've got lots of opportunities ahead of us. Gold. Wow, gold. This thing is just a killer. Deep overnight price probe to the March swing low. Right about here. Okay, we've got another swing low, not too much lower at 1660.30. That's from the 21st of April of this year. We took a move down there. We tested those lows. This is kind of presenting itself as some pretty stiff rejection. It's going to be very interesting to see how and where gold closes today. Okay, is this going to be acceptance below this weekly kickoff low here, which is, we've already opened below it? 1754 is weekly kickoff low. Are we going to accept? Is this going to be a big, long shadow or area of rejection? If we can't accept down below here, if we re-accept back above that weekly kickoff low, that's going to be, I think, some relatively important information as long as we can hold that low. Okay, what we're looking for is acceptance below this line or rejection below that weekly kickoff line. That is a pivotal area, and we are, of course, likely to find some fish there. Take a look at the 30-minute chart. We had some pretty serious overnight shorts that took the market right back to where weekly kickoff low, 54 to the tick in the overnight after we found acceptance below it. We're still finding that as resistance. We have pretty much, I think, reconciled our overnight move to the downside with the consolidation that's been occurring below this level. So, you can almost feel how the market is focusing on this level here, this 1754 even, for some sort of direction to come from that area, from that level. We traded down to it last week. We traded down through it last night, back up to it, earlier this morning during the London session. It's definitely, I believe, an an eyesore that the market is kind of focusing on. And when the market focuses on something, it tends to go back to it. We're still holding a gap. If we can't if we can close that gap relatively early, that's going to indicate that there may be some serious fishing that we're going to need to do if we get the opportunity back up at weekly kickoff low. But again, that number 1754 even. Take a quick look into the euro. All right. Just like the gold, but without going down below the weekly kickoff low, which in the euro is 117.45. 117.45. 117. It's 117.45 in the euro and 17.54 in gold. Kind of strange how that sometimes happens. We added 12,000 contracts, 12,000 in the euro on Friday on a directional move to the downside on higher volume. This downside auction is presenting as stronger or more likely to continue than the downside auction in gold. Doesn't mean that it's not going to happen or that nothing is going to happen. It's just something that we notice. Okay, we had a big increase in open interest on Friday to the downside. Overnight test to the last night of the weekly kickoff low, pretty close. Swing low back over here, weekly kickoff low over here. Again, we're looking at the weekly kickoff level and the euro being pivotal, but from the opposite direction. We have gold coming back to the weekly kickoff low. We have the euro taking a look down to it in the overnight. Where's the fish? Where are the fish here? Okay, we have no overnight position. Settlement is 117.65.5 ticks. Put that on your charts. Here's that weekly kickoff low. Couldn't get to it last night. We're really going nowhere today. We're in range and in value. Says, okay, well, maybe we just need to be patient, wait for an opportunity that presents itself as the day goes on. I know I'll be looking for an opportunity down near weekly kickoff low. If we can't hold outside of Friday's range and value, then I think the opportunity may be back to the upside. It's going to be an interesting trading day all the way around, I believe. And to the 10-year, last week's low, finding some support last night. Open interest on Friday on this big down move on higher volume. It says we only added 600 in open interest. To me, that's a bit of a flaw to the downside. Take a look at what we've got here. We've got upside move. We got upside structure. We have 3 days down, 3 days lower in an upside move. Today, technically, should be an up day. Of course, it depends on rates, as always. But when you get 3 down days in an uptrend, that fourth day tends to be a move higher. Take a look at the 30-minute chart. All right. So last week's low right here. Can't hold below it. We don't really have any overnight inventory with which to speak of. Settlement, 134 even. An attempt to kind of show some acceptance outside of value from Friday, back into value, back to basically point of control. If the point of control and settlement offer an opportunity with value low just down below it, I'm calling this a target-rich environment. I'm thinking, this settlement, point of control, and value low here are going to offer an opportunity. We may find some fish. I'm looking for a little bit deeper move into this zone, but it doesn't mean that it's not going to create an opportunity. And remember, 3 down days typically are going to create that fourth day up in an uptrend. And, is it possible we could have some repair? It's entirely possible. We have a point of control here. We have a point of control here. We have a gap. If we can't stay in here, if we can't go lower and we reject value from yesterday, that increases the probability of that actually happening. All right. So today is Monday. I'm going to put in the link for group coaching, which is Wednesday at 1 o'clock. And I'm going to put in the link for market therapy with Dr. Andrew Menaker. We are hoping that he is going to be able to attend this week. So I'm going to act as though he is, and I will be able to tell you actually on Wednesday morning if he's going to be able to make it or not. He's got a couple of things going on, and hopefully he is going to be able to come and join us on Wednesday. Market therapy is always at 3:15. Markets are pretty much closed. I usually turn down the lights a little bit, and we're going to be talking, I think, a little bit more about the importance of healthy goals in trading, not necessarily time-based or monetary goals, more, you know, process goals. So there's that opportunity. Fred with a question here. I see an unfilled gap 67.47 to 67.84 going back to July in crude oil. How should I think about this unfilled gap in your opinion? I'm going to just open up my charts here. I'm just going to see if I can find that here. So from 67.47 to 84 going back to July in crude. I see. Those would present themselves upon revisit, Fred, if I'm looking at the right thing here, as structural weaknesses to the upside. Now, have we filled those gaps on the way down is really the question. Let me see if I can see here. No, I don't have them on this Trade of 8 chart, so I'll have to take a look at that and talk about that maybe tomorrow, Fred. I'll see if I can't find that and take a look at it. But if it was filled on the way down in regular trading hour session, they're not really gaps. And open interest is, here's the daily bulletin. I'll put it in the chat here for you. There's the daily bulletin. Just click on that, find your product, and then scroll. It's going to be a preliminary number for the open interest until after about 9 o'clock. You just refresh the page after 9 o'clock, make sure it says final, and then you'll get your final open interest. Yeah, that's right, Fred. Yeah, one way to know if there's a strong trend going on is if the market seems like it doesn't want to let you in. It's so true, so true. So all right, we've got equities just opening up. I'm going to take my deep breath. Trade well today. Patience, gratitude, humility, and creativity to you in your trading today. I will see you back here tomorrow morning at 8 o'clock. You should see Dan for the market recap at 3 o'clock this afternoon. And I will see you tomorrow morning. Same bad time, same bad channel. God bless you. Have a great trading day. I'm looking forward to your success. We'll get them.